So let's get to how traders are behaving. Volumes are subdued, cash is still high, and down days are still seeing investors sitting on the sidelines. So let's get through the detail with Gemma Dale from nabtrade up on the desk. So we've seen a little bit of mixed trade this week. How are investors approaching this market?
Guys are still really, really reserved at the moment. They're just not seeing much that really excites them. As I said, on a down day, you will see some buying, but it's not super aggressive. It's not by the dip mentality. It's not people rushing in. No one's seeing the bargains of a lifetime right now. They're seeing a whole lot of falling knives. The one thing they're getting really excited about is whenever anything that's just been absolutely smashed to pieces has a pop, we see huge selling, massive. So clearly there's a lot of people who've got their alerts on and they know what to go for. So Appen was the big one yesterday. It was over a 90% sell, and they will all be thanking their lucky stars this morning. Probably 6 o'clock last night going,
Yeah, well, it was funny because Appen has been in such a downgrade cycle, as you well know. There's so many people that got into it when it was one of the lauded wax stocks. Remember that?
Yeah, popular for a while.
And you know, it's just been, and we've talked about it a number of times, you know, do you get out now? We've held it for this long. So yeah, I was said yesterday there would be a lot of Appen shareholders thinking, you know,
you've got to move so quickly and you've got to be aware of what's going on. And one of the conversations I have frequently with fund managers and professional investors is like, God, your guys move super fast. I was like, well, technology's changed, right?
Yeah.
20 years ago, you had to read the newspaper and you had to call someone if you wanted to put your trade on, and you had to be across everything. Now you can just have your alert set. It'll let you know when something's moving and you can move really quickly. Thankfully, a lot of our guys did move really quickly on that. The other one that's been kicking around is BrainChip, which was quite the trader stock some time ago, fell out of favour entirely, had a little pop yesterday or a couple of days ago, and everyone was like, oh, thank God, getting out. So we're seeing this sort of very aggressive selling when people get a window to kind of close on an uplift.
You can kind of get a sense from that sentiment is a bit shaky. Monday, post-election, did you see any buying that you could draw a line between the election?
Not really. I mean, we saw a massive rally after the 2019 election because there were very clear implications for investors. The lack of refunded franking credits is a huge issue for our guys because we have so many self-managed super funds and people who were highly dependent on those refunded franking credits for their income. I think one of the challenges with that policy is it's a lot of tax policy you can move around and people don't really understand it. But that one, you knew exactly what your dollar amount was and people were very anxious about the idea of losing it. There'd been real downward pressure on the banks leading up to the election, and then that pop, everyone went, thank God, and ran out and bought banks again from what I could see. We haven't seen that this time because there was no obvious policy implications for anybody. There's some stuff at the margin. We still don't know for sure that Labor has a majority in the House of Reps. So it's all a bit at the margin at the moment. People didn't get too excited, to be honest.
What about if we compare to, say, 12 months ago when clearly we're in a bull market and we weren't too far off all-time highs? Volumes, are they different, much different now from when they were back then?
Oh, so different. So probably what's most material is that we've had a doubling in the total number of investors and traders we've got. So you would expect volumes to be double what they were, let's say, a bit before 2 years ago, like pre-COVID, because let's never compare to COVID again. That was ridiculous. We don't expect that to happen very often. But let's say pre-COVID, you would expect them to be dramatically higher. The new investors skew younger and skew less wealthy for obvious reasons. They've just come to trading for the first time, so they're not the people who've been doing this for 25 years and have a huge portfolio to trade. They're getting started in most cases, but it's not double. In some cases, we have days where it's well below the average pre-COVID, despite having so many new people in the market. So yeah, it's really quiet. People are just either they're kicking along, enjoying their dividends, and just not worrying about the volatility, or they don't really know how to play this.
Last time we chatted, we were talking about BHP, about that $43 level. It's still sitting around there, $43.41. Still seeing buyers around 43?
We had a bit of weakness during the week. We had a 96% buy on huge, like crazy volumes, like Fortescue volumes. So that was quite amazing. I was just like, guys, you've had plenty of opportunity to buy this. It's not like this is some extraordinary price you haven't seen before. They were all over it. Loved it.
Really?
Big day for it.
Fortescue as well, you mentioned it before, they still a fan favourite? Still going.
It's a daily trade. It's a high value daily trade. It's just going to keep going until it stops working.
Yeah.
But it keeps going. I mean, I'm kind of amazed by it. It's been, say, 18 months now, and we assumed that some of that predictability would have come out, but no, still there, still making money, got to keep doing it.
So in the States, we have got some pretty high profile results out this week. NVIDIA is one that comes to mind that disappointed. Now, I had a great conversation with a fund manager yesterday saying, yeah, opportunity, because the big trend, the mega trend toward IoT, toward 5G, everything that's going to require these chips has not changed. That it's the China supply issue, very short term. So did we see buying in NVIDIA when it dropped?
Yeah, this is really interesting because NVIDIA is one of those stocks where people are loosely familiar with the name. It's not a brand in the same way as Tesla or Apple or any of the ones where it's extremely tangible. You have to be slightly more focused on the market or in tech to know what NVIDIA is. The average layperson is going to have less of a strong concept of what the company does and what its prospects are, but clearly it's in the headlines and people were happy to buy it. So we did see a bit of NVIDIA and Advanced Micro Devices, so AMD, that was in there as well. They're two that were very popular like 4 years ago. They're still paying heaps more now, but they were very popular a few years back, sort of got swept up in the wave when everything was running hot, and then now people are just coming back to them a little bit, just a bit.
So is Tesla still the chosen US tech play for clients?
Overnight, interestingly enough, the value of it wasn't dramatically higher than anything else, but that tells you a lot. Like one night, the value wasn't dramatically higher. Every other night, it's dramatically higher. It's off like 50%. Yeah, right. But it's also, run insanely hard. So, yeah. And
ETF-wise, just to wrap it all up, what are we seeing there? Is it still an expression of international themes?
It's always interesting, ETFs. The bit that we've seen is that people keep buying ETFs when we have a down day, and that is happening consistently. But we've seen the NASDAQ come in, so the NASDAQ 100 ETF specifically is coming in as a buy consistently now. Clearly people feeling that there's a bit of a flaw there, or maybe they're going to do some dollar cost averaging into that. Let's see what's happening exactly. And then also some gold, and that's telling you a lot. That's an interesting one.
I think the NASDAQ one is interesting as well because, many investors perhaps missed the boat the first time around, or individually these stocks look so expensive, but that those big companies will do well in the future. Some of the disruptors will not. Snow comes to mind this week, for example, but I mean, you've got to think that it's not baby out with the bathwater time in some of those quality US names.
Yeah, there's a universe of stuff that we all use every day. It's not going away, and people are hoping for the opportunity to pick it up at a bargain price, and they don't know if this is the floor, but it's one way to get a hell of a lot of exposure and then hopefully keep picking up some more.
Gemma Dale from nabtrade, always a pleasure. Thank you.
Great to talk to you guys.